Good afternoon and welcome. We are the Market Dominators, and this is the Market Dominators Real Estate. And welcome again to the Market Dominators Real Estate Podcast. A version there, but we got it done. And here we are. We apologize for that. We are very excited to be coming to you again to be able to share with you what is the cutting edge info going on. I am your host, your co-host, John Spasjak, Associate Real Estate Broker and the original Market Dominator. I am here with my partner, Market Dominator, the #1 buyer specialist in Western New York, Mr. Award-winning agent Scott Catillus. What's up, my good man?
Glad to be here, John. Glad to be here. Excited to talk about the world of real estate. And hey, if you're tuning in for the first time, we want to welcome you. Thanks for joining us. We hope that you gained something valuable out of our chat here today. If you're returning, thanks so much for returning. We want to encourage you, as you see here, to like and subscribe our channel. We release weekly content that we hope you will come back for again and again.
Yes. Market Dominators team on YouTube. Yes. So, you're going to get the opportunity here to be tuned into the Market Dominators and get free content. And most of these podcasts are done actually for realtors.
Yeah.
There are very, very few that are done for you, the consumer, the client, the seller, the buyer, to navigate this really, really wacky, crazy real estate market all across the country.
Yep.
Usually we say real estate's local, local, local. And it's different in different markets. And while you do have some of those differences, price levels, some of the similarities that are going on are really going on everywhere.
Absolutely.
Like appreciative growth, multiple offers, lack of inventory, high demand.
Yeah.
These things are happening everywhere.
Right.
Not just in Buffalo, New York region or the 8 counties that we serve in.
Sellers are experiencing the same stories that are going on, and buyers are experiencing the same level of competition. Doesn't matter if you're here, if you're on the West Coast, or somewhere in between.
Yeah.
It's all over the place.
So how do you win in this market? Well, this is how you win. You educate, you advocate, you negotiate, and you dominate. That's what we do here at the Market Dominators team. It starts with education. That's our educational platform. If you see our logo, which you will in the top right-hand corner of your screen, the Market Dominators has a graduation cap there. And it's not because Scott and I are very educated. It's because we care about information being downloaded and conveyed to you so that you can make an informed decision. And as my partner here likes to say, you will be empowered to make your own choices for your own best interest.
Absolutely.
So that's what we do.
Yeah. We look at houses, we tour them, we know the ins and outs of them, and we know the ins and outs of the process that is involved in buying and selling, but the consumer doesn't. And so one of the things that I've noticed, John, over the last handful of years, but even before that, a little bit, really. I mean, I remember selling cars and having this conversation 6-7 years ago, was that there is this increase of basically taking away, you could give it any name you want, but I'll just use a simple term of a salesman, right? So when I would sell cars, there was this increased push that the middleman, the dealership, the car salesman was slowly becoming obsolete. Basically, you had a car, manufacturer built it, it got shipped to the dealership, and then the dealership sold it to the consumer. And over the years, that model has been challenged. Tesla is a perfect example. There are no Tesla dealerships. You just buy it directly from Tesla. Some people love it. Some people hate it. The same thing has crept into the real estate industry. And what used to be where you would buy it either directly from the seller or you would use a real estate agent to help you manage the transaction. Now you have companies coming in that are continuing to kind of try to take out the middleman and in the end make the process smoother and cleaner, as they say, right? And so one of those things is this is your biggest asset. This is your house. Are you going to go into it with no education? Are you going to leap into it not having anybody working for you?
Nobody advocating for you?
Nobody advocating, nobody negotiating,
And certainly nobody
no
dominating.
No dominating, right? So that's kind of what we're talking about today.
Yeah, that's right. That's what we want to cover here. So, I think probably about 15, 20 years ago, there was a company in the travel industry called Expedia.
Okay. Yeah.
And Expedia really wiped out the business of travel agencies. You don't see them anymore. There are a few.
Sure, they're there. But
they're there.
Not
but
very prevalent.
Not like they were.
No.
Okay.
No.
So you have this going on, and there have been companies that have tried really hard, like you say, to wipe out the real estate agent.
Yeah.
Now, in America, you can sell your house yourself. You don't need an agent.
Absolutely.
Okay. If you want to do it, you think you're educated enough, you think you could advocate for yourself on your own, you think you're good at negotiating, you can try to dominate. And most of those people we know from research, because we can look at the properties that were conveyed through a transaction without a realtor and look at the values, and you could actually create data that shows whether or not they left money on the table.
Right.
And we know that 94.6 of for sale by owners leave money on the table, even after you factor in what they would have paid an agent.
Yeah.
Wrap your brain around that.
Yeah.
Okay.
Yeah.
So we want to talk about this. First of all, last week we began to talk about bubbles in the market, interest rates going up like insanely right now, fast.
Yeah.
And
very fast.
Is that going to cause a crash in the market? And earlier today, we had lunch and you were discussing one of our clients maybe wanting to hold off, but they're hearing advice from somebody else in the real estate business that says you should hold off for a year until the market crashes.
Yeah. Until the bubble bursts.
Until the bubble bursts.
Right.
Folks, can I just explain something to you? There is no bubble. It's not a bubble that we're in. It feels like it, but it's not. And when you look at the data, we are not overpriced. What we are is we are differently priced than we used to be for so many years in the Buffalo region. Okay. And not unlike a lot of other markets in the country that similar things are happening to. Now, some of those other markets are used to this happening from bubble experiences like Florida, Vegas, Phoenix, places in California. These places did have bubbles in the past where values rose up real high and then came down again real low. And people did well and did poorly based on when they made their moves.
Right.
This is not that. Don't confuse the two. This is a steady incline in appreciative growth in Western New York, 8 counties, in which we have seen almost little or to none to little growth over a period of several decades. So now, all of a sudden, we start seeing something that's normal to pick up. We have a lot of ground to make up. If you pick up a typical, Center Hall Colonial in Western New York suburb and pick it up and put it in a suburb of Pittsburgh, we're still going to be underpriced. And that's a comparable city, a comparable market. That tells you that we are not yet at the top of our appreciative growth.
Right.
Now, factor in what's going on with inflation, and we know that all numbers are going to rise.
Yeah.
Inflation is like rising the tide. All the boats will rise with it.
Right.
Right?
Right.
So that's what's happening as the same time.
Mhm.
But there is no bubble. Make no mistake. If it does come down, everything's going to come down. But keep in mind, as the interest rates go up, you're going to need that market to come down at a faster, effective pace than the interest rates are going up. Good luck on that.
Yeah, right.
We already went
Right.
over that measurement last week.
Yep.
Okay.
Yep.
Now, in the meantime, you do have this thing going on because I've been looking at it lately. And for some time, initially when Zillow came out with their thing called the Zestimate,
Mhm.
they were all over the place.
Yeah.
They spent years trying to figure out their algorithm to determine what the value is on a house.
Yeah.
And it's a brilliant, brilliant marketing strategy to come up with this thing called the Zestimate.
Yeah.
Right.
Yep.
Because everyone knows what a Zestimate is.
Oh,
now,
yeah. Yeah.
right?
We talk to anybody and they say, I think my house is worth X. And I say, well, okay, well, what leads you to believe that? Well, I looked on Zillow.
Yeah.
That's like their starter point. I looked on Zillow.
There are credit unions, there are small community banks that are using Zestimates as appraisals.
Yeah. Mm-hmm.
That's crazy.
I just had one happen.
Just crazy.
For a home equity line of credit.
There you go.
They used the Zestimate.
They used the Zestimate.
Didn't have to pay for an appraisal. Just said, we look at that number. Okay, that's what we'll use. You can take out this much.
It's starting to have some credibility in the market that way.
Yeah.
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 Now, as realtors, we belong to an association. What is our association?
The National Association of Realtors. NAR.
What's our local association?
Oh, the BNAR, the Buffalo Niagara Association of Realtors.
And in order to be a member of the Buffalo and Niagara Association of Realtors, it is required that you also become a member of the National Association of Realtors,
right,
as well as the New York State Association of Realtors.
The NYSAR.
Right.
Yeah.
So we are members of the BNR, the NYSAR, and the big one, which is the NAR, which has, hundreds of thousands of agents as members. That makes us actually also official realtors.
Right.
So you think that the BNR, the NYSAR, and the NAR would support agents. And I've come to realize that is not true at all.
Yeah.
Okay. At all. And now there's a double-edged sword to that.
Yeah.
Because you would think that there would be some backing there to push agents. And while the NAR claims they do, guess what website the NAR owns?
Which one?
Realtor.com.
Oh, okay.
Wouldn't it have been really, really cool if back in the day when you could, people were buying up website names, domains, and you bought Realtor.com?
Yeah, right.
Ooh,
that'd be good.
That's a good one. So Realtor.com has now come out with their own estimate. Maybe it's a realist, a restimate. I don't know.
Yeah. Realtor.com estimate,
Yeah.
whatever it is. Yeah.
Yeah.
They've got their own number too.
They got their own number on their properties.
Mhm.
So you could look up any property. And right now, if you were to just pick randomly 10 properties and you wrote the addresses down,
yep,
and then next to them, the first column is your Zestimate, and the next column is Realtor.com's estimate, how close do you think they're going to be?
I think they could have a decent spread.
Yeah.
Decent spread.
Right now, Realtor.com is significantly higher.
Yeah.
And they're using that as a marketing tactic to pull more people to them because it's more favorable to show your property at a higher value.
Absolutely.
Is that a real integral, honest way of showing somebody the real value on their property?
No. Inherently
not at all.
No.
Not at all.
Does Realtor.com just inherently believe that everybody's properties are just worth more than Zillow thinks their properties are worth? No, probably not. No.
And that's just basing it on the Zestimates comparison. What about an actual comparison?
Right.
Somebody like a local agent doing the work to pull up the actual recent historical data on transaction movement for a comparable house that somebody wants to know their value on.
Yeah. There's very little way. I mean, we say this a lot, John. If you don't expose your house to the market, if you don't ultimately take it to market and get the most amount of, publicity, the most amount of people looking at it, then how can you know for sure that you sold it for the most amount of money? I mean, we say this all the time when we're talking to people. Anybody can sell their house. Sure, you could sell your house. You could put the sign out in the front yard. You could maybe look and see a couple houses that sold and get an idea of the price and then put it up and let people come through. You could do that, right? Most people can do that. But are you really going to be able to sell it for that number that you didn't think that you could possibly get for it if you're not exposing it to the most amount of buyers possible?
Yeah. I mean, come on now.
You'll
You
never
have
do
to
it.
create the most amount of competition to
Mhm.
drive up price.
Yep.
It's very simple.
Right.
Every single market in the world works that way.
Mhm.
More demand you have, the less supply, the higher the price.
Right.
Okay. So I recently sold my own home, right? I
Yeah.
should say you sold it.
Yeah. You listed it. I sold it.
Yeah.
Yeah.
And my wife and I, we were going to keep it to rent it. I hope I haven't told this story. If I have on the podcast here, I apologize. But we wanted to keep it, and then we decided, I don't know if I want to rent it. I don't know if I want that headache. So I said to my wife, Kelly, why don't we put it up for sale and you write down a ridiculous number that if you got that number, you would sell the house. And I'll write down my ridiculous number that if we got it, we would sell that house.
Yeah.
And then we'll compare those numbers so that we're both agreeing on the same ridiculous number that if we get it, we'll sell the house. Does that make sense?
Yep. Yeah.
Okay. So that's what we did.
Yep.
Now, fortunately, my wife and I are pretty aligned and we wrote down the same number. Okay. Now, we are the market dominators, folks. We are ranked in the top 0.2 or less, maybe top 0.8%. I think something ridiculously low.
Yeah.
Out of 38 plus 100 agents in Western New York. Now, we don't say that to pat ourselves on the back. We say that to bring this context that if I did not know what I could sell my own home for, how could I possibly tell a client what they could sell their house for?
You can't.
Because when I brought my house to market, we got $20,000 more than the number that Kelly and I had written down.
And that was already
our
high.
ridiculous number.
Yeah, that was already.
So you're taking the market dominator, goes to sell his own house. He puts a ridiculous number on it and he sells it for 20 grand more.
Yeah.
Is that because I'm a great salesperson? No, you can't really sell somebody a house anyway. People, they're going to take their time on that decision.
Yeah.
Right. So, I mean, you can't tell anybody what your house is going to sell for or what it's worth in this market. You can only look back and go over recent historical data to say what your house is worth.
Yeah.
Right.
Right.
But if we based everything on recent historical data, we like to say this a lot.
Yeah.
How would a market
Move
ever
up.
go up
Yep.
or down?
Yep. Or down. Right.
It wouldn't. It would always be tied to its history.
You're right.
So
you're right.
when a market's moving like it is right now, it doesn't mean it's a bubble. Okay. What it means is that we have low inventory, high demand, and inflation happening at the same time.
Yeah.
Okay. Now, interest rates have been low enough where it created that demand and it wiped away the supply.
Right.
So it's going to take years for that to correct itself.
Yep.
That doesn't correct itself in a month. Okay.
No.
How many single family homes do we have in Erie County, which is the second largest county in New York State?
Like 500,
500.
510, 520, maybe. Depends on the day.
There are hundreds of thousands of homes
hundreds of thousands. Yeah.
in Erie County.
Yeah.
And we only have 500.
Yep.
Okay. So it just goes to show you that it's going to take years. You're not going to wake up next month and all of a sudden there's going to be 2,000 homes available for sale.
No, absolutely not. And what you've got now is you've got a ton of people that have bought their homes in the last 2, 3, 4 years, and they are locked into that 30-year mortgage with like 4% or less. And now they're looking and going, well, if I'm going to go sell my house and upgrade, I'm going to sign up for a 6% rate. I don't want to do that.
No.
So it's just causing them to sit tight.
Yeah.
And so when people think about the bubble, we're in the bubble, I was in high school in 2008. Okay. So I'm not like claiming to be there. Right. But I talked to people who were there, and it's a completely different set of circumstances.
And
what
even
it is
then, it
today.
wasn't a bubble.
Right. Well, what you've got now is I mean, John, how many times do we have people putting down a crazy amount of money on a house? Crazy amount.
Mhm.
And if they're not putting down a crazy amount of money, they're going to guarantee that if the bank appraisal comes back low, they're going to cover the difference.
That's right.
So everybody thinks like, oh, you're buying these houses and you're going to immediately be underwater if the market drops. Well, no, if you bought your $500,000 house and you put down $150,000, you're not going to be underwater.
You're buying a $350,000 mortgage at
Right.
a much lower interest rate.
Right. So for everybody saying the bubble, the implication of the bubble is that everyone's going to be underwater if it pops. There's a lot of money floating around.
Yeah.
Government
it's a false
printed-
perception.
Yeah, it is, and again, goes back to what we were saying. If you don't live in the real estate world, if you don't sell them and buy them and deal with this every day, I don't expect you to know, but that's why you got to get educated about it, because you need to make sure you're making a good choice.
That's right, folks. You are tuning into the Market Dominators Real Estate Podcast,
Mm-hmm.
where we seek to educate, advocate, negotiate, and dominate. That's what we do. We're bringing you live, cutting edge content to help you feel more confident and understand how to navigate this crazy real estate market. And one of the things that I want to touch on, as we started to in the beginning of the show here, was this concept of these online businesses trying to take over the service of the agent.
Yeah.
And while, of course, we're coming from a biased perspective, we also can come from an experienced perspective, knowing full well the value we bring to the table and how to measure the difference for what that value means to a client. And so I have a home in Florida, and I was just sharing with you that the Zestimate is at one price. And if I hop over to realtor.com and I look at the price, the Zestimate is about $45,000 different on realtor.com, higher on realtor.com than it is on Zillow.
That's
so that's a pretty big delta from companies who are supposed to be tech companies telling you with their algorithm, pulling all kinds of public data. How could they be that off?
Yeah.
That's crazy. Because I'm going to tell you why it's off. They have other motivations. They don't represent you. Okay. They represent their business.
Right.
An agent has to give you fiduciary representation, a fancy legal term, which basically just means that they have to look out for your best interest above their own from a legal perspective.
Yep.
Okay. So realtor.com and Zillow don't have to do that.
No.
And so if you really want to know how to best market your home and what marketing price to put on it and what potential range you might be able to get into in a sale, you need to speak to an expert agent in your market. Okay.
Yeah.
It doesn't have to be us. We can't sell every house for every client in Western New York, right? 8 counties.
We wish we could, but we can't.
Yeah, but we're just not gonna, right?
Yeah.
There's a lot of other great agents.
Absolutely.
Not too many out of the 3,800 plus, I got to tell you, but enough where you can get, and even outside this market, if you're, tuning in from another market, there's other good, high quality agents and professionals that you could speak to that can help you determine a marketing strategy that will launch you into a price bracket that you can sell your house in.
Yep.
And then let the market determine what your house is actually going to be worth, not some algorithm.
Yeah.
Okay.
You're right.
And so it was fine for the travel industry, because what Expedia did for the travel industry is it took all of the data that's out there for all of these airlines, all of these hotels and rental cars and these resorts. And it put them together and it created these packages, and the volume of people it was able to pick up, they were able to get good pricing and make it easy for you to go to one site instead of having a travel agent dig through and try to find something for you. So that worked, but they weren't selling you an actual product, right? It's an experience they're
Mhm.
selling,
Right.
right?
Right.
And you could go around and pick up those experiences yourself by booking it yourself, just like a seller, if they want to sell their home, they could sell it themselves.
Mhm.
But now you're selling a product. And how do you determine what the value of that is? Does the Zillow site say, okay, we're going to take your house and we're going to shop your house to all the home buyers and determine what is the best price for your house?
No,
No,
they don't do it.
no. Does Realtor do that?
No.
No. But they are starting to get into having services do that for you, like, Red Door and Open Door.
Mhm.
These are other services who are promised to give you offers.
Right.
Okay.
Mhm.
And then you can compare those offers, but every one of those offers is coming from somebody that doesn't represent you.
Right. Right. Well, and perfect example, Zillow had their iBuyer service that they started several years ago. And during the COVID pandemic, it was great. Hey, I can sell my house and I don't have to interact with anybody. I don't have to have people coming through and looking at my stuff, touching my stuff, getting close to me. People, I get it. There's a segment of the economy that wants that, but Zillow loaded up on homes to the point where they couldn't handle it. They had like, I don't know, some insane $9 billion worth of homes, and they actually had to stop the program. The program has been stopped for the better part of half a year because
That's right.
they couldn't work through the backlog.
Yeah.
They're
They
buying
couldn't.
these homes and they're trying to fix them up a little bit and sell them and make a profit. They didn't have the people, the materials, the manpower, the capacity to handle all of it. So when you take out your specialized local agent, your local representation, and you get big mega company that's just trying to shove you through the tiller as a number, you're going to get lost in the shuffle. You're going to get lost in the shuffle.
Yeah. So when we compare some online service to getting the personalized care of an expert real estate agent, it's a massive difference.
Absolutely.
And not only are you trying to devise a way of getting to a higher price for your house, but you also have to navigate the transaction.
Right.
So in New York State, we have to deal with attorneys, we have home inspectors, we have loan officers, we have insurance agents, we have appraisers. There's all kinds of parts to the transactional process that it's incredibly important that you have somebody that not only is educating you, but advocating on your behalf. And then obviously at every turn, you have to be willing, prepared, and able to successfully negotiate in order to dominate.
Yeah.
So, folks, we hope that this information is critically important to you. A realtor.com value on your home and a Zestimate value on your home, or any other site that's going to do that for you, is only giving you a very, very, very broad stroke range on what the value is. And that, for you to sink your teeth into and say this is what it's worth because they said that, would be a big, big, big mistake. Don't do that. It's effective marketing that puts people, buyers, through a funnel system that makes them and forces them to compete for your home in a market like this. And that's the best way to drive up price.
Yeah.
And by the way, it's the experienced, excellent agents out there that are causing this in the market, and therefore they're selling the houses at higher prices.
Right.
And that's what's moving the market.
Yep.
So actually the realtor.coms, the Zillows, they're adjusting to what agents have done in the market.
Absolutely.
The agents are the real ones that are giving you representation and advocating for you, educating, advocating, negotiating, and dominating. So yes, thank you for tuning in to the Market Dominators Real Estate Podcast here. I am your host, John Spasjak, Associate Real Estate Broker and original market dominator himself, here with my co-host, my good man and friend, killer agent, number one buyer's agent in Western New York, award-winning agent Scott Catillus. So thank you for tuning in. We are super, super glad that you are tuned in, and we would ask that you like and subscribe the Market Dominators team, where we bring you consistently good content. So without any further ado, we would like to say
Go Bills.
Go